Freshworks stock, or FRSH, is down about 50% from its IPO, making me wonder, is this a potential sale? As I've dug in, it also came across as a company with a low-cost advantage, and that always gets me excited whenever I see a company with a potential competitive advantage, because when you have a competitive advantage, it makes it easier for you to compete over time. So is it possible that Freshworks, FRSH stock, is a potential winner from here? Let's talk about it. Let's talk about what do they do. If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and I did not own stock in Freshworks. FRSH is the ticker. And so Freshworks is a low-cost, hyper-growth SaaS business, software as a service business, with three core products: Freshdesk, which is customer support service; Freshservice, which is IT service management software; and Freshsales, which is customer relationship management software. So all different software solutions dealing with very different verticals, whether or not it's customer experience, IT service management, and sales and marketing. These were all built on their Neo platform and are designed to work smoothly together, which is a distinction from, let's say, Salesforce, the behemoth in the industry, which is more of a buy and build strategy, acquiring different companies and stitching products together. There's no doubt there's plenty of competition from much bigger players. I just talked about Salesforce, for example. That said, they try to set themselves apart with an accessible user interface, rapid onboarding, and being affordable. They talk about, for example, with Freshdesk, which is one of their first products that they offered, you have Zendesk, you have Salesforce, you have legacy providers, and same thing with their other products, where you have real significant players that are much bigger and growing at nice clips. But they're saying, look, we try to have such an accessible product that enables this rapid onboarding, no matter how big or small a company you are, and it's generally more affordable than, let's say, some of these big companies. And when you think more affordable, you're potentially talking about a lower total cost of ownership for this software. Part of the reason why Freshworks can offer a more affordable solution is because nearly 90% of their employee base is based in India. This is much cheaper than a Silicon Valley first or even geographically diversified competitor. For example, during the last quarter, Freshworks had around 4.4 thousand employees versus 5.5 thousand employees at Zendesk, one of their, a customer support software competitor. So in contrast, you notice only slightly less employees at Freshworks. In contrast, Freshworks generated around 96 million revenue in the quarter versus 347 million for Zendesk. So 20% fewer employees, but only 28% as much revenue. So 70% less revenue. So 20% fewer employees, 70% less revenue. So how is that possible? Well, meanwhile, they both had comparable losses and operated around break even for cash flow. So I'd argue this ability to employ so many people, despite their relatively smaller size, could allow them to develop more products quickly over time and also allow them to target the very bottom of the market. And this does create a potential advantage over time. This relative lower cost is that they can easily sell, easily attract to small and medium businesses looking for an affordable or even free solution that and sort of work their way up. Okay, you start here and then maybe larger companies come on board. And this is how their business model has evolved, where it's starting with this, open up the fire hose of inbound demand and respond to that. That's a great way to get significant return on investment on your sales force. And then as you start tapping that out, then you move up and saying, oh, okay, we need an outbound sales force. We need a partnership sales force. But having a self-service model with a low-cost product, that does create the significant market of the small and medium-sized businesses. And you can see this dynamic at play as how they're evolving over time, where they previously were, the majority was small and medium businesses, but now, over time, the mid-market and above is now the majority. Still, small and medium businesses, a significant portion of their annual recurring revenue. And this can be also seen by the percentage of customers paying, let's say, over $50,000 a year, which has grown from less than 30% of their business to nearly 40% in the last 2 years. Despite, I'd argue, significant competition, and it showed some of their competitors, just a minute ago, despite real competition, by this low-cost advantage and lower market focus, there's still a huge opportunity for them to tackle. I mean, focusing on small, medium businesses, you're still talking about tens of billions of dollars of market opportunity for their different products. But let's be clear, while Freshworks might be a low-cost player, there will still be brutal competition. For example, there's a section on Zendesk's website that calls out customers that made the switch from Freshdesk to Zendesk. So it shows, like, you can click on the different ones that'll show, like, oh, these are direct quotes of customers that made the switch. And these, prior customer quotes question the stability of Freshdesk's solution. So, I mean, this is just in the trenches type of fighting. I don't like to see that. It definitely does make it tougher when you have more and more players, doing this type of thing. That said, it's a big enough market. It's still possible that you have multiple winners. It's just not unrivaled, and that's the goal of this channel, is to find unrivaled companies. Okay, so what about valuation? First, a quick plug. If you're interested in following along with my personal financial journey, go to unrivaledinvesting.com. Each month, I call out potential multi-baggers as well as my personal portfolio. We also have an exclusive community dedicated to learning and trying to find exceptional companies on Discord. So if you're interested, go to unrivaledinvesting.com, click join the journey. And if you enjoy videos like this, learning about potentially exceptional companies, potentially unrivaled investments, please make a point of hitting that subscribe button or hit that thumbs up button. So despite dropping over 50% or around 50% from its IPO opening, Freshworks still trades at a relatively rich or very full valuation of around 20 times sales. That said, given their low cost advantage, it's possible that they iterate and launch products faster than companies multiples of their size. I mean, this is a real advantage. It's also possible that building all their products versus this buy and build approach, could create a user experience advantage, where, let's say, the Salesforce product might be a little more jinky because you have so many different pieces here that were bought and ideally integrated, versus here it is all being built on this Neo platform. Of course, the stock price can go way higher or lower than what I end up penciling out. It depends on sentiment and execution, but if they continue to post strong growth in the years ahead, it's possible for the stock to rally, let's say, over 130% in the coming years. I sort of penciled that out as saying, hey, they're on track to do around 50% growth this year. Yeah, they're currently unprofitable, but given they have around 80% gross margins, maybe long-term they can get to around 30% optimized margins. What's the growth rate over the ensuing 5 years? Given that they're able to hire so many people, given that this is an India-focused, employee base, they might be able to iterate, launch new products on a global basis, be able to sustain a high growth rate for the years ahead. So I'm assuming on the high side, 40% plus growth. And so assuming, let's say 5 years out, 35 times multiple, you might want to say higher or lower, that's up to you. But, looking at a company, we're on the high side, maybe talking about around 140% upside potentially. Obviously depends on the execution. And the low side saying, high 30% growth, maybe 25 times multiple, maybe, effectively around break even, a little bit better than break even. Personally, I'm considering this and I'm saying, on my journey, I really want to focus on those unrivaled companies or something that, strikes me as exceptional, and that it's really likely that they're going to win over time. And so I'm going to pass on this one. I'm going to pass on Freshworks for now. If you have a strong opinion about it, definitely leave a comment below. I prefer to stick to the unrivaled companies, or companies that I think, like, hey, there's something really special about this, or there's just not that many competitors, so therefore you should win over time. For example, for my Journey subscribers, I just called out a medical device company at the end of last month, where it's like, yeah, this seems like they're the only ones offering this product in the marketplace. There's no other solution for this very small subset of the population. And based on the risk reward, I think there's like 600% upside. So that's the type of setup that I'm personally looking for with these unrivaled plays. But if you have a strong opinion about Freshworks, definitely love to hear it. If this video has been helpful for you, talking about Freshworks, talking about the recent IPO, FRSH, if it's been helpful for you, please make a point of hitting that thumbs up, hitting that subscribe button. Thanks so much for tuning in.